All right, so I know a lot of you are going to be asking the obvious question: how did I actually catch this buy on GU today? So I'm going to break it down and then GU and USD card and just tell you how interesting it is. All right, so on the H4 time frame, which is like one time frame you can use if you want to swing. This place has already been mitigated, right? Has already been mitigated. You guys know what I taught you about mitigation, right? And then here as well has been mitigated, right? So this is a valid buy. This is a valid buy because, like, okay, you can remember this entry model where we can have a high and then price doesn't taking out this price to do something like this, then drop enter here and boom, right? But then that criteria is only if a zone here has what not been mitigated. But if a zone here has been mitigated, this is going to be what cancelled, right? This is going to be cancelled. So we're going to expect price towards rather price will buy from what's here. Price will buy from here, right? So that is that. So you can see what happened this particular week. This rejection week was what mitigated this particular H4 candle. So I'll be expecting that price comes into this particular rejection week by up to at least the 50% mark, right? When price does that, I would want to see a reversal pattern. So you can see the price bought into it and started going up, right? But there's no reversal pattern here. This is an indecision pattern, so not yet. You can see what now happened. Price came. Although I was selling, I sold from here. I sold from this particular top, right? I also sold from this particular top as well, right? And I also sold from here, but this one was so premature. I closed it ASAP. So now what happened? Price has already sold into the 50% region. You can see price has sold into the 50% region here. But now we're going to wait for a reversal candle. And you can see the inverse head and shoulder, right? You can see I say inverse head, the inverse hammer, right? The inverse hammer. And you can see the inverse hammer broke the structure broke structure, as it broke the candle in front of it, right, confirming the bullish price action. And what did I just do? I came down to M15 minutes time frame, right? Came down to the M15 minutes time frame, and here you can just decide wherever I want to pick your how you want to pick your trades, right? This is the target. You can actually use here as a target, right? This was where I use as my target, or you can even target this particular extreme. But this one is so far off, you may not be so sure that price is going to mitigate. You can see this FVG. That was what price used. So if you had used the FVG, if you had used the other block, anyone at all, you're still correct, because okay, we can see our inducements, right? We can see our inducements. We can see that price has swept this particular low. And not just this low, price has also swept this. I think this is an Asian low. Price has swept it, and see what happened. This particular place now becomes a protected level, right? This particular place now becomes a protected level, and price will buy from there. So you can either choose to sell from the other block. Sorry, I say sell. I keep saying sell. You can choose to buy from the other block, or you can choose to buy from the consequent encroachment of the FVG. And the consequence encroachment of the FVG is nothing but the 50% mark of the FVG, right? The 50% mark of the FVG. And so you just take your entry from there, and your targets on that high, right? Then your SL below that low, boom, and you have a 7-hour trade. Now let's get to the one on USDCAD, right? So let's see what USDCAD did. USDCAD did a very, very interesting thing, right? Something interesting that I love. So now, if you recall, when I was teaching liquidity, I made mention that psychological levels too can also be traps, or psychological levels can trick people to think that price wants to continue selling from there. So let me just clear everything off and we'll look at this for me. a much easier perspective. So all right, so let us look at it. So I say something like this, right? Price buys into a support and drops, buys into a support and drops. Automatically a perspective has been already built above here, that there is something holding price from buying above this level, right? Now the human mind is going to be so wired to thinking that price is not going to ever get above that particular zone, and this is one of the easiest traps, right? Because naturally what price will do is this: price will first want to buy, sell from, obviously you'll be correct, price will sell from somewhere around there, and then give you some sort of pattern that you think, okay, this is a reversal pattern, right? Or price is giving me a continuation, not knowing that price is going up to take out every form of liquidity there and then drop. Your bias is correct, but the entry is what, too early. So what will happen is that price will take this particular price will take this particular liquidity and then drop to the target, right? So this is where the break happened, and that's exactly what happened on what USD CAD. Now we can see the H4 break, which confirms a mega bearish. There was even a COCH before. You can see this break here. It confirms a mega bearish bias, like, and people will be expecting that price is not going to go above this high. It is going to be like an invalidating zone for a lot of persons, right? It's going to be an invalidating zone for a lot of persons. I took a sell from here, but I TP'd around here, around this demand here. That was where I TP'd, because it is a reversal pattern. These patterns, when they show up as other blocks, are also very strong. You can see it. This same pattern we saw on what, the GU, right? So our target is going to be what, here for the sell. So but what will happen, price will first go up to what, take out those people around here, and let's see what price did. So you can see what price did. Price took the liquidity and dropped. Now if price, this is two scenarios that happen. This broke with the body, right? If this second candle has broken again with the body, that has broken above this one with the body, we would what, continue buying. But you can see the rejection the price gave. After price broke with this body, it was more like a deceitful, something very deceitful happened around here, right? Very, very deceitful, because like price now rejected back into this particular level, and when price rejected back, that was basically my only proof that price was going to sell, right? And although it was the 20 minutes time frame that I used, okay, so you can see the FVG there, very, very clear, right? Again, you get a gun box, mark out the FVG completely, and what, take yourself from the what, consequent encroachments. Target on this low. Although I came out earlier than this, if I held this, I would have been over 20k today. Stop losses above that high, and boom, this is a 15-hour setup. A 15-hour setup, very, very easy. You just need to be patient, wait for the market to show you all your parameters, and you basically execute. So I hope you've been able to understand why I took this trade. Before, there will be a lot of questions. I've really seen a lot of questions in my DMs. People are asking, how did you take the trade? How did you take the trade? Break it down, and I just did the breakdown. So I think with that, we've come to the end of this session. I'll see you in the next one. Take care.